welcome to the VSA Capital 5 Minute Morning Miner on Friday the 20th of June. Paul, you're back in, where are you, Paul?
I'm right here in South London, and it's the hottest place I've been in days and days.
Yeah, it's going to be hot. Not that hot in the markets today, though, unfortunately, and it's going to be glorious down in Cornwall. But there you go. I'm just writing actually at the moment to all the CEOs of the Cornish mines, trying to go and visit them. I don't know. Sometimes they just don't want me to visit. I think they get nervous that I ask questions that are difficult. Actually, the one person you want to visit and speak to is the guy who maybe is a little bit cynical or doesn't always agree, because what you should try and do is correct them and get them to become more bullish. Just talking to people who are already fans of your business, i.e. your current broker often, it doesn't work. You need to get the other people to get your share price moving. But anyway, that's beside the point. Right, Paul, news a little bit thin this morning, so I'll just let you go ahead and talk about really what you want to talk about.
Well, we'll start off with our client, TS or ASX listed tungsten producer EQ Resources. They announced today that their retail fundraising came in with an additional Australian $1.77 million brought in to add to that $18.8 million fundraising that they completed recently. There was also a separate regulatory announcement out that one of their major shareholders, Chronomet, had actually sold down its significant institutional interest back at the end of May. So these funds, otherwise with strong investment support, very much appreciated from the rest of the investors and the new ones brought in on the recent raise.
Yeah, I mean, EQ, as most people know, is one that we really do like because it's got production coming out of both Spain and Australia. And the one thing about tungsten is, tungsten prices running hard at the moment for obvious reasons. But you want to be producing because that's when you get the benefit of the higher tungsten price. Not a total surprise that Chronomet have sold down. I mean, it's not their core business to own stakes in equity. And the problem is, of course, that what we're seeing right now is that every tungsten mine in the world that's brownfield or is in exploration phase is trying to get into production. And we saw that in the lithium game. There was a shortage of lithium, the price went ballistic, and then everybody started producing lithium. The danger in tungsten, it's not quite the same because there is far less tungsten around. It's exactly the same thing happens. Everyone starts producing tungsten or expands their capability, and the price comes whizzing back down again. I don't think it is going to be quite like that, by the way. I think there is a long-term good trend for the tungsten price. But as I have said to a few people, the times people have made a lot of money in tungsten have been World War One, World War Two, and the good news is we're probably in World War Three. Anyway, there you go. That's enough on that. We always talk about tungsten far too much. Actually, what we should do, Paul, is talk about a little bit this Camel, who have increased their offer price for New World Resources. And I think the market thought they were paying a very high price in the first place. So what do you think of this, Paul?
Well, just to give the listeners a view on it here, the Camel had increased their offer now to Australian 5.3 cents per share, which values New World at 197 million currently now. This is an increase on the alternative transaction structure as well for a off-market takeover in parallel with the scheme at 5.3 cents, subject to a 50.1% minimum acceptance. And Keppel's also to provide $10 million in funding via placement in new shares as well. And this is specifically shareholders to remember to get control of a particular copper deposit which has nearer term development potential in Arizona, tier one, of course, jurisdiction being the United States for copper production, and a domestic priority there as far as the issuing of permits. Because this particular deposit has been in production before, there is already, and it has already been permitted previously by Arizona State, the time of permitting should be very, very fast with Camel proceeding with investment development of that mine for a restart. So I can see why they're paying that particular amount, but they'll have to demonstrate to the marketplace just how much more upside in this particular deposit there is to be. So some extension drilling, I think, news out from them as soon as they get some kind of a resolution on the deal itself will be most appreciated.
Yeah, the market obviously got wind of it yesterday afternoon because the price fell sharply. So today it's sort of unchanged at 157. But it's this frustration with Camel that it never quite gets going. I mean, I did have this very good chat with Nick Clark, the chairman, at the Cornish Mining Conference last week. And I mean, I think what this company really does need to do is talk more to people who are following it and really explain the story. Again, this goes back to what I said the first time. Trying to talk to the people who are just talking to your own brokers doesn't solve the problem. They're already positive. You've got to talk to the people who are basically want to sell the stock. And obviously you've got this whole dividend realignment that needs to be fully explained. But anyway, that's for the company to do, not for me. I can only suggest it. So what can I say? Anything else, Paul?
Yes, did want to mention too, because we're bullish on tin, of course, that AIM quoted Rome Resources made comment on recent geopolitical news announcements out that the DRC is in negotiations, and there are signs afoot that there is a cease hostilities agreement between the DRC government and neighboring Rwanda in the works. And that would essentially end or hopefully bring more peaceful circumstances to the eastern DRC. Now, the result of that would mean that as peace or more peaceful conditions prevail, then the movement of mined materials would otherwise improve across the borders, and that should end up in weaker, nearer-term copper, cobalt, and tin prices, I would think.
To keep an eye on. Always interesting what's going on in the DRC and Rwanda, whether America is going to come charging in, etc., etc. So anyway, all right, Paul, I think that'll do. I hope everyone has a wonderful weekend. I know it's very hot. I'm going to have a wonderful weekend, and we'll be back Monday. Thanks.
See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.